We welcome you to the weekly wrap-up of Indian markets. Here we discuss the key developments that took place in the markets during the entire week. After starting the truncated week on a back foot, Indian equity market benchmark came back stronger with cheerful moves on Thursday and Friday, which led to the indices to conclude the week in greens. The benchmark index Nifty 50 started the week adversely with sharp cuts aided by weak global sentiment coming from the hotter-than-expected US job opening data, fanning the fear of US interest rates staying higher for longer, and the sentiment was further aggravated due to high crude oil prices, elevated bond yield, and stronger dollar. Meanwhile, the broader market indices such as Nifty Mid-Cap and Nifty Small-Cap took the bigger brunt as it fell more than large-cap indices and the onset of the week. However, the market secured the much-awaited bounce back through the middle of the week, aided by 5% overnight fall in crude oil prices, softer dollar, and yield taking a breather. The benchmark index Nifty 50 ended the week flat with minor gains, and in terms of sectoral leaders, Nifty Realty saw an up move of around 2%. Nifty IT index also saw an up move of around 2%. The consumer durable index saw an up move of around 1.5%, and these were the leaders, whereas the healthcare, diagnostic, and pharma were the laggards this week. The Nifty healthcare saw a downtrend of around 2%. Again, the pharma index also saw a downtrend of around 2%, and Nifty oil and gas, of course, saw a downtrend move of around 1.5%. In terms of stock-specific moves, Bajaj Finserv, Bajaj Finance, and Titan were the top gainers, whereas the ONGC, Axis Bank, and Maruti Suzuki were the top losers. Though the benchmark index Nifty 50 ended the week snapping 2 weeks losing streak, the real move was there in Indian bond market post the RBI's meeting during Friday's session. The 10-year bond yield saw biggest spike in more than a year as RBI planned to curb the liquidity. The 10-year bond yield moved from 7.18% to 7.34% as the RBI announced possible sale of GSEC through open market operations to manage system liquidity. On the policy front, RBI kept the repo rate unchanged at 6.5% and highlighted that RBI remains focused in keeping the inflation in check. To know more about RBI's policy decision, please watch our detailed video on RBI credit policy available on YouTube. Though the Indian markets concluded for the week, the investors would keep an eye on key US job data awaited tonight, which might have an impact in the global markets and also an eventual impact on the Indian markets when we open on the Monday session. In terms of key things that one needs to look for the next week, investors should keep their eyes on the earnings of major companies, starting with Indian IT companies named TCS, HCL Technologies, and Infosys, followed by HDFC Life and Avenue Supermart. On the macroeconomic front, key economic data points such as US CPI inflation, India's CPI inflation, and India's WPI inflation data would be under focus. As the market are heading into earnings season and awaiting key macroeconomic data, both on domestic front and global front, investors should exercise caution before taking leveraged bets on the market. To stay ahead of the market, do subscribe to our research-based services which are designed to navigate investors on the path of wealth creation. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait further and embark on the wealth building adventure together. Thank you and have a great weekend.